界及媒体的朋友们，大家新年快乐！我是台积电企业讯息处的孙佑文，欢迎您今天来参加我们台积公司2017年第4季的法说会。由于这个法说会是向全球投资人同时连线转播，所以我们全程会使用英文，请您见谅。Happy New Year, everyone. Welcome to TSMC's fourth quarter 2017 earnings conference and conference call. This is Elizabeth Sun, TSMC Senior Director of Corporate Communications and your host for today. Today's event is webcast through TSMC's website at www.tsmc.com. If you're joining us through the conference call, your dial-in lines are in listen-only mode. As this conference is being viewed by investors around the world, we will conduct this event in English only. The format for today's event will be as follows. First, TSMC Senior Vice President and Chief Financial Officer, Ms. Laura Ho, will summarize our operations in the fourth quarter 2017, followed by our guidance in the first quarter of 2018. Afterwards, TSMC's two co-CEOs, Dr. Mark Liu and Dr. C.C. Wei, CFO Ms. Laura Ho, and TSMC's chairman, Dr. Morris Chang, will jointly provide our key messages. After that, Chairman Chang will host the Q&A. For those participants in the call, if you do not yet have a copy of the press release, you may download it from TSMC's website at www.tsmc.com. Please also download the summary slides in relation to today's earnings conference presentation. As usual, I would like to remind everyone that today's discussions may contain forward-looking statements that are subject to significant risks and uncertainties, which could cause the actual results to differ materially from those contained in the forward-looking statements. Please refer to the safe harbor notice that appears on our press release. And now, I would like to turn the podium to TSMC CFO, Ms. Laura Ho, for the summary operations and current quarter guidance.
Thank you, Elizabeth. First of all, Happy New Year. Good afternoon. Thank you for joining us today. My presentation will start with financial highlights for the fourth quarter and a recap of 2017 for the whole year. And after that, I will provide a guidance for the first quarter. Fourth quarter revenue increased 10.1% sequentially to 278 billion NT dollars, mainly driven by major mobile product launches and continuing demand for cryptocurrency mining. Gross margin increased 0.1 percentage point sequentially to 50.0%, as the benefit from higher capacity utilization and the inventory valuation adjustment helped offset the impact from continued 10-nanometer margin dilution and NT dollar appreciation. Total operating expenses increased by 1.3 billion NT dollars, but thanks to operating leverage, only represented 10.4% of revenue versus 10.9% in the prior quarter. And operating margin increased by 0.3 percentage points sequentially to reach 39.2%. Overall, our fourth quarter EPS reached $3.83, and ROE was 26.9% for the quarter. Now let's take a look at wafer revenue contribution by application. During the fourth quarter, communication and computer increased 20% and 8% from the prior quarter respectively, while consumer and industrial and standard decreased by 38% and 4% respectively. On a full-year basis, computer and industrial standard increased 25% and 14% year-over-year respectively, while communication and consumer decreased 2% and 10% respectively. Now let's take a look at the revenue by technology. 10-nanometer process technology continued to ramp strongly and accounted for 25% of total wafer revenue in the fourth quarter. The combined 16/20 contribution was 20% of total wafer revenue. Advanced technologies, meaning 28-nanometer and below, accounted for 63% of total wafer revenue, up from 57% in the third quarter. On a full-year basis, 10-nanometer contribution reached 10% of total wafer revenue in 2017. The combined 16 and 20 contribution was 25% of total wafer revenue. Advanced technology, 28-nanometer and below, accounted for 58% of total wafer revenue, up from 54% in 2016. Moving on to balance sheet, we ended the fourth quarter with cash and marketable security of 649 billion NT dollars, an increase of 148 billion NT dollars. On the liability side, current liabilities increased by 60 billion NT dollars. On financial ratios, accounts receivable turnover days decreased 2 days to 40 days, while days of inventory decreased 1 day to 52 days. Now let me make a few comments on cash flow and CapEx. During the fourth quarter, we generated about $204 billion cash from operations and spent 61 billion in capital expenditure. As a result, we generated free cash flow of 143 billion, and our overall cash balance increased 145 billion to reach 553 billion at the end of the fourth quarter. In the US dollar term, our fourth quarter capital expenditure reached 2.1 billion, and the total CapEx for the whole year was 10.9 billion US dollars. Now, I would like to give you a recap of our performance in 2017. 2017 was another strong year for TSMC, as once again we set a new record in terms of both revenue and $77 billion. As we saw wafer shipments increase across nearly all technology nodes. Gross margin increased 0.5 percentage point to reach 50.6% in 2017, as continued operating efficiency improvement and better capacity utilization more than offset the headwinds from the unfavorable exchange rate and the 10-nanometer margin dilution. Our operating margin declined 0.5 percentage point to 39.4% as we increased our R&D spending ratio to 8.2% of revenue, reflecting a higher level of 7-nanometer and 5-nanometer development activities. Our effective tax rate for 2017 was 13.5%, same as in 2016, and full-year earnings per share was $13.23 NT dollars. On cash flow, we spent 331 billion NT dollars in capital expenditure, or 10.9 billion in US dollar term, while we generated 585 billion in operating cash flow and 255 billion NT dollars in free cash flow. We also paid 182 billion NT dollars in cash dividend, and an increase of 17% from 2016. Now I have finished my financial summary. Now let's turn to the first quarter guidance. Based on the current business outlook, we expect first quarter revenue to be between $8.4 billion and $8.5 billion US dollars, which is an 8.3% sequential decline, but a 12.6% year-over-year increase at the midpoint, and represent a new record high in terms of first quarter revenue. Based on the exchange rate assumptions of $1 US dollar to 29.60 NT dollars, our first quarter gross margin is expected to be between 49.5 and 51.5%. Our first quarter operating margin is expected to be between 38 and 40%. This concludes my remark. Now I would like to turn it over to Mark for his comment.
Thank you, Laura. Good afternoon. Firstly, I would like to talk about our Everyone's Foundry strategy. Being everyone's foundry is the strategy TSMC takes by heart. Through our technology and services, we build an open innovation platform where all innovators in the semiconductor industry can come to realize their innovation and bring their products to life. As our customers continue to innovate, they bring new requirements to us, and we need to continuously develop new capabilities to answer them. In the meantime, they utilize those shared capabilities such as yield improvement, design utilities, foundation IPs, and our large-scale and flexible capacities. In this way, this open innovation ecosystem expands its scale and its value. We do not compete with our customers. We are everyone's foundry. Now on cryptocurrency demand. In the past, TSMC's open innovation ecosystem incubates numerous growth drivers for the semiconductor industry. In the 90s, it was the PC chipsets. Then, in the early 20s, the graphic processors. In the mid to late 20s, it was chipset for cellular phone. Recently, start 2010, it was for smartphones. Those waves of innovation continuously sprout in our ecosystem and drive the growth of TSMC. Lately, we observed the demand from cryptocurrency mining surged. Cryptocurrency mining requires massive high performance and low power computing. TSMC's advanced technology and productization services suit it well. We have sized 2018 cryptocurrency mining demand carefully. Since it is still in its early stage of development, it is difficult for us to forecast its demand too far into the future with accuracy. However, as long as the cryptocurrency miners can derive positive returns, demand for TSMC wafers will continue. Furthermore, we are quite certain that deep learning and blockchain technologies, which are the core technology of cryptocurrency mining, will lead to new waves of semiconductor innovation and demand for years to come. Now on N5 progress and EUV readiness, our N5 technology development is well on track for 1Q 2019 risk production. We already achieved good SRAM yield. Device development is also well on plan. Progress on both are similar to our N7 at the same development stage. N5 customer test chips are already running in our fab. We also made significant progress in improving EUV capability and the manufacturability. We have been consistently demonstrating high yield on N7 Plus and N5 development lots. EUV source power is now operating at 160 watt to support our N7 and N5 development activities. EUV scanner with source power of 250 watt has been installed in our fabs. Capability of in-house EUV particle making has also been established with low defect level and good transmission properties. So we are confident that our EUV technology will be ready for high volume production for N7 Plus in 2019 and N5 in 2020. On the growth platform of our mobile, high-performance computing, IoT, and automotive. In 2017, last year, all our growth platforms, mobile, high-performance computing, IoT, and automotive, registered double-digit revenue growth in US dollars. Moving into 2018, growth of these platforms continue. We estimate that the high-performance computing platform will register the strongest growth in US dollars. For smartphones will continue to include new features such as 3D authentication, 3D sensing, AI for face and voice recognition, and 18:9 display. Our smartphone customers are taping out 7 nanometer for premium phone and 12 nanometer for mainstream phones. Both are on track to ramp in 2018. In 2018, high-performance computing business will enjoy the most growth from GPU and cryptocurrency ASICs. The key technologies for high-performance computing are 16 and 12 nanometer and 7 nanometer, together with our CoWoS technology. IoT business growth in 2018 mainly comes from smart voice assistant devices, application processor for wearables, and wireless MCU for smart homes. Our 22 ULP/ULL, ultra-low power, ultra-low leakage technology will be key to all these applications. Automotive business in 2018 will come mostly from increased IDM outsourcing to TSMC in new technologies. We have built automotive-specific design ecosystem on 16 FFC in 2017, and we'll complete that on N7 in 2018. TSMC's superior manufacturing quality, sufficient capacity support, and our long-term automotive supply commitment are the key enabling elements to expand this business. Thank you. I'll turn the microphone to C.C. Wei.
Thank you, Mark. Let me talk about the near-term demand and inventory. We concluded our first quarter with 10% Q-over-Q growth in US dollar, which was slightly above the guidance we gave 3 months ago. Despite continued inventory reduction by our customer, Fourth quarter's strong result was mainly driven by a major smartphone release, which is based on our 10-nanometer process with Info, and the strong demand in cryptocurrency mining. Concluding 2017, semiconductor excluding memory growth was 9%, while foundry grew 8%. TSMC's revenue grew 9% in US dollar and accounted for 56% of the total foundry market segment share. Moving into first quarter 2018, our revenue in US dollar is likely to decline by about 8%, as Laura just guided. This is mainly due to smartphone seasonality, offset partially by continued demand for cryptocurrency mining. Fabless DOI exceeding 2017 was a few days above seasonal level. Moving into 2018, we forecast fabless DOI to trend up, but will track seasonal pattern. Now let me talk about N7 and N7 Plus. So far, we have already taped out 10 customers' products in 7 nanometer, and we are currently qualifying these products in 2 different fabs in preparation for volume production starting in second quarter this year. During first quarter 2018, we expect to tape out another 10 products. In total, we expect to have taped out more than 50 customer products in 7 nanometer by the end of 2018. Major applications covered by these tape-outs are in mobile, game, GPU, FPGA, networking, and AI. In essence, almost every area that requires high performance and lower power consumption will benefit from TSMC's 7-nanometer solution. In terms of performance, power, area density, and schedule, we believe our 7-nanometer solution is leading in the foundry industry. We will introduce our N7 Plus technology later this year. Here, we plan to replace some immersion layers by deploying a few layers of EUV processes. Currently, we have already demonstrated the same level of 256 megabit SRAM yield at N7 Plus as compared to N7. Now let me move to N10 status. We successfully ramped up 10 nanometer in 2017. 10 nanometer contributed 25% wafer revenue in 4Q17, up from 10% in third quarter. Full year 10 nanometer accounted for 10% of our total wafer revenue. Both defect density and device performance are meeting our targets. Despite that, most of our current 10 nanometer mobile customers will start to migrate into 7 nanometer this year. We continue to expect a year-to-year growth of our N10 business in 2018, driven by application processor, cellular baseband, and ASIC CPU. Now let me touch about N16, a 12-nanometer demand outlook, and competitive position. TSMC continues to enhance technology performance for every node, and 16 nanometer is no exception. We have moved from 16 FinFET to 16 FF Plus, and then to 16 FFC. Now we are moving into 12 FFC. With 12 FFC, we can improve the device by about 10% from 16 FFC, or reduce the power consumption by about 20%. All the while, we expect to reduce the die cost as well. It is the 4th year today that our N16 and N12 enter into high volume production, and we still expect to see very strong demand for this node, which is supported by current plan of 120 tape-outs this year, covering a variety of mainstream smartphones, cryptocurrency, AI, GPU, and RF products. Although other foundries may have planned to enter into 12-nanometer node, TSMC achieved the lowest defect density It enjoys a very competitive cost structure. As a result, we expect our market segment share in this node will be increased. Now let me move into 28 nanometer. Similar to 16, 12 nanometer node, TSMC continues to improve the N28, N22 performance from 28 LP to 28 HP to 28 HPC and 28 HPC Plus, and now to 22 ULL and ULP, which stands for ultra low leakage and ultra low power. The newly introduced 22 ULP ULL will enhance performance by increasing speed by about 15% or reduce the power consumption by about 25%, with an overall die area shrink of 5 to 10%, as compared with the 28 HPC Plus. Both 22 ULP and 22 ULL are ideally suited for IoT and RF-related applications. Beyond continued performance enhancement, our excellent manufacturing capabilities and our significant investment in capacity are also important contributing factors for customers to choose TSMC as their primary foundry. Last year, we saw about 240 product tape-outs using our 28-22 node, which was a record high since 28 nanometer into volume production in 2011. We expect this tape-out activity to continue in this year, and we are confident that our high market segment share in the 28-22 technology node will be maintained. Now I will talk about advanced packaging. I will update two of our advanced packaging technologies, chip on wafer and substrate, or CoWoS, and integrated fan-out, or InFO. We have developed CoWoS to support the requirements of HPC applications, particularly in the area of AI, data server, and networking. This is the 6th year that our CoWoS technology has been in production. We see more customers engaging with us on this technology, and we expect to receive more than 30 tape-outs in the next 3 years. Most of the products today are using 16 nanometer technology. We are actively developing CoWoS for 7 nanometers starting from this year. TSMC's InFO has entered into high volume production for the 3rd year, with majority of the adoption by mobile products. Beyond mobile, we are working to expand InFO to automotive and HPC-related applications. For example, we developed the InFO on substrate, or InFO OS, for HPC products, and will qualify this technology in first half of this year and expect to enter production later this year. Today, we are working with various customers using InFO technology to cover their products ranging from N28, N16, N7, and N5 technologies. Last, let me talk about the Nanjing Fab update. We expect to expand our business in China and to enhance our support to local customers with the Nanjing Fab. Planned capacity for this phase is 20,000 wafer per month 12-inch, using 16 nanometer and 12 nanometer. We broke ground for this fab in July 2016 and have now almost completed move-in all production tools. We have already started the initial engineering wafer. More than 1,000 engineers are working in this fab today. Customers at a Nanjing Fab come from both China and the other regions, with a variety of products in the initial ramp. Due to the strong demand for our 16-12 nanometer technology node, we have pulled in the output schedule by a few months to May of 2018. We are confident that we will be able to reproduce a good result of our 16 and 12 nanometer node in Nanjing. That's all I have. Thank you for your attention. Now turn the podium to Laura.
I would like to make. Hello.
Hello. How about this one?
Let me make a comment on CAPEX and outlook for future capital intensity. Now, let me start with CAPEX. Our 2018 CAPEX is expected to be between $10.5 billion to $11 billion, which is essentially flat with our 2017 CAPEX. About 73% of the capital budget will be used for capacity build-up for the advanced technologies, mainly 7 nanometer, followed by 5 nanometer. Another 17% of the capital budget will be used for R&D, back-end, and mask. As I stated in our last investor conference 3 months ago, in order to support our 5 to 10% growth in the next few years, we expect our CAPEX in the next few years to stay a few percentage points more than $10 billion. This implies that our CAPEX in the next few years will remain at a similar level to what we have spent last year and what we expect to spend this year. Although our leading nodes capital costs continue to increase due to increasing process complexity, we are able to offset its impact to our CAPEX by further optimizing our capital planning and productivity improvements. With a flattish CAPEX going forward and the revenue CAGR of 5 to 10%, we expect capital intensity, which is the ratio between CAPEX and revenue, to gradually decline from the current 30 to 35% level to 20 to 30% level in the next few years. However, if any special revenue growth opportunities comes along, we will certainly respond to it with appropriate CAPEX. The chairman may comment now.
I will now make some comments on TSMC 2018 outlook. First, some comments on the semiconductor market. We estimate the supply chain inventory at the end of 2017 to be still a few days above the seasonal normal level. We estimate that the total semiconductor market will grow 6 to 8% in 2018, 6 to 8% this year. The semiconductor market, excluding memory, will grow by 5 to 7% this year. And total foundry revenue will grow by 9 to 10% this year. Dollars will grow by 10 to 15% over 2017, 10 to 15% in US dollars over 2017. Our revenue seasonality will be similar to 2017. stronger in the second half than in the first half. Our revenue YOY, year-over-year growth rate now, however, will be stronger in the first half than in the second half. Basically, we expect the first half 2018 revenue growth rate in US dollars will be slightly above 15% over the first half of 2017. And the second half 2018 growth rate to be slightly under 10% over the second half of 2017. All these are in US dollars. So the slightly above 15 growth rate in the first half and the slightly under 10% growth rate in the second half make up the 10 to 15% total year growth that I spoke about. Is that clear? Mm-hmm. Mm-hmm. Good. No raised hand means everybody understands, okay? Our strong growth in 2018 is fueled by the growth of 3 of our growth platforms. Those 3 growth platforms that fuel our strong growth this year are high-performance computing, HPC, IoT, and automotive. HPC will grow strongly due to continuing expansion of AI applications in all electronic devices and the continuing demand for cryptocurrency mining, GPU, etc. Mobile platform will be flat. And then for the IoT and automotive platforms, there is considerable strength. You might describe the situation as the acceleration revenue growth in the 2017 to 2021 period. We reaffirm that plan. In 2017, our revenue grew 9%. In 2018, we expect to grow our revenue 10 to 15%. 2015 will be an above average year.
All right, this concludes our prepared statements. Before we begin the Q&A session, I would like to remind everybody to limit your questions to 2 at a time to allow all participants the opportunity to ask their questions. Questions will be taken both from the floor and from the call. Should you wish to raise your question in Chinese, I will translate it to English before our management answers your question. For those of you on the call, if you would like to ask a question, please press the star and 1 on your telephone keypad now. Questions will be taken in the order in which they were received. If at any time you would like to remove yourself from the questioning queue, please press the pound or the hash key. Now, let's begin the Q&A session. All right, first question will be from Goldman Sachs, Dong-No Lu.
谢谢. My first question is to the chairman, and really nice to see you here. what is your view on in cryptocurrency, which is very have a surging growth in recent months? So that's my first question. The second question is on N7 Plus. I think if I hear correctly, the performance of N7 Plus is similar to N7. Is that correct on speed, performance, and power? I just want to clarify that. Thank you.
Well, let me answer the first. I think you ought to come along here and repeat. And I heard that he was asking about cryptocurrency. The urge to mine cryptocurrency is very strong. The incentive, of course, depends on the price of cryptocurrency. And the price of cryptocurrency is very volatile. But the demand right now, or for the last year, has been very strong, and we expect it to continue to be strong. However, we have, in Mark's words, sized the demand carefully. We have sized demand carefully. So I believe that we will both satisfy our customers and will not be too optimistic. So you asked the second question of Mark? Oh, CC, okay.
Okay. Well, let me repeat your question, the N7 process performance versus the N7, right? Okay. N7 Plus actually is about 10% better performance than N7. And in terms of area, it will be also about 10% smaller. But if you put all together, like a critical layer, that by using EUV, you reduce the critical layer number. So we expect per wafer you will get more than 10% more dies from N7 as compared with N7 Plus as compared with N7.
Can you explain the last point? You have about the critical layer, you have less layer with N7 Plus?
Yeah, because we're using the EUV to replace some of the immersion layer. So give you one example, one EUV layer can replace the 3P, 3E, replace the 3 layers of immersion. So in calculation of the defect density,